Okay, good. Okay, well, welcome everybody to today's webinar hosted by FX Street. Today we're going to talk about automating supply and demand because I know this is something that interests a lot of people, including myself. Let me see who we've got here. Okay. And so what I'd like to talk about today is precisely that. So, I mean, how do you, or rather, show us a solution of automated supply and demand trading and how does it go? And so I just want to show you, I mean how I'm trading, the tools that I'm using, and I'd like to walk through the method of trading this particular way because it's pretty simple and it's a very interesting way to do it because it enables you to focus on super important things, rather many different things, all of which are important, but without dying in something that's super complex. And so we'll focus on that. And I think that it'll make a lot of sense once we begin to move through the material. So Adinda, can you see this chart just here? This is my Instagram profile. Yes, okay, cool. Okay, so this is Pipnotic's Instagram account. It's Pipnotic, sorry, pip.notic on Instagram. It's a real pain, but someone took Pipnotic, which was a real blow. But this is where we post a lot of the trades done by the algo trader. And a lot of them are pretty incredible. And so essentially, if we go to the new ones, we had several today. This is one that we had today. And this is just a really good example of what we're looking for, where we have an area of demand that is established. And this thick white box here is essentially the algo trader telling us where we want to buy. Okay, so it told us that you want to buy at this area here when this white dot is drawn on the chart. And this white dot is drawn on the chart when the area is qualified, and it is qualified when this blue candle closes. So when this blue candle closes, and all of these candles, they're not even on the chart yet, but you know, according to the algo, that when prices come to this box, this is where you want to buy. And this is what we saw here. And it happens on all sorts of different ones. We had this one here. We had another box. This is the pound American dollar. This is a trade from yesterday where we wanted to buy here and we wanted to get out of the trade there. Just a one-to-one entry, stop, target. Prices went up here. We actually went at 1 to 2 and then we came back to the entry. Okay. And we can keep going. We can look, here's another one. This is a Kiwi American dollar on the 1 hour chart where we had this area of demand that was qualified when this blue candle here closed. So as soon as this candle closed, this box was drawn on the chart. Okay, prices came to it as soon as it was formed, and then prices went all the way up here really far. And then prices revisited, and then we managed to depart. And so there are a lot of interesting trades available based on this way of trading supply and demand. Here we have another one. This is a Euro British pound. This area was qualified when this white dot was formed. About maybe 10 hours later, price came to the dot, sorry, to the box, sell. We had actually 3 visits to it. And on the third one, this is where we saw prices managed to move away. We have another one here. This is on the Euro 50. This is like the European equities index. This is a 4-hour trade. This area of supply was formed when this red candle closed. Drew the dot, the box is put onto the screen, and then it comes up, and this is where we take the trade. But notice also we have a line that looks like this, and this line just tells the user which area of supply, rather which price structure was compromised when this area of supply was formed. And it was this low here. Prices came up, down, up, we came down, we moved away, we formed this area of supply, and then prices traded below this, qualifying this area of supply just here. And we can look at these all day long. We have another one here. We had a low. Okay, This area was qualified. Why? Because this candle, the departure candle, was lower than the previous structure qualifying this area of supply on the 4-hour chart. Is that blue or is that white? I can't see. Yeah, we'll say it's blue because it's a 4-hour chart. And so, yeah, you know, a day or so later, a day and a half, 2 days later, prices came back and we tested that area. But after this one was formed, we had an opposing area of demand that was formed here just below. It was qualified when this blue candle here closed. We managed to trade above that. We tested that area and we moved all the way up here before we managed to move through. And so the process goes on and on and on and on. We had another one here. This is a hourly trade. This is the Australian equities index. We had the low, the area of supply that traded below it, tested that area, and then prices managed to move away. And there's a lot of, notice that all of these images here, they show actually very little price action. And the reason they show very little price action is because this methodology doesn't need a lot of price action. What it's looking for is bleeding edge price. It's looking for prices to do something. It's showing us levels of supply and demand that are very close to current price. And if they are, then this is a good thing. It means that everything is fresh. Sentiment is in the market. The short-term trend is in the market. And so when this happens, we see situations like the ones that I'm showing you here. We had another one here. Okay, prices traded above this high here. We formed this area here, prices came back and we left. This is super, super typical and it works on absolutely anything. Everything from crypto to equities, to Forex, to commodities, to absolutely anything. Have another one here. This is a 4-hour. Okay, prices leave. We come back within a relatively short period of time, and then we manage to trade really far away. We have this area of supply that was tested 4 times, and then we managed to move away. Okay, and so here's another one here. This is Euro franc. We had this area here. Prices left. We moved beyond this high here, which was historically an area of resistance. Price accumulated, we popped up, we pull back the slingshot, roughly where the entry is, then prices leave. Okay, so super, super simple. And notice again that the trade, the price that we're looking at, the prices that we're looking at are focusing on very bleeding edge price action, as you can see here. So we don't have to see a ton of data. I had another one here. I mean, this would have been sufficient to see maybe 10 candles maximum. Okay, prices left. The zone was created when this red candle closed. We came back, we tested it, and then we had a huge move away. We had another one here. Okay, prices moved away, and then price probably, I haven't looked at this trade afterwards. It came back to it, and then I'm sure we had a reaction there. Okay, so this is what we're doing over and over and over and over and over again. Okay, on all time frames, from the hourly to the 4-hour to the daily, these are the main time frames that we operate in, but they seem to work very, very well. There's another one on out. This is the hourly chart on the euro pound. We had price structure, price moved beyond it. We had a test on the release. The first candle back, filled the trade, and then we managed to move away. Okay, so we see that very, very often. So if we go to the charts and and look at this. Let me get rid of this. Okay, so can you see my chart here, Adinda? Just to make sure that. Yes, cool. Okay, so in here we have kind of a similar situation, but this is where we have a 3 different time frame approach. This is the setup that I use and all the people who I assist use. And what we're looking for here is we're looking for we have a daily chart, 4-hour chart, hourly chart. Okay, and so we have some indicators below price, but we don't have to pay attention too much to those. Those we're not using. But what we are looking for is we're looking for these patterns to emerge. So we just start from an end. Let's just start here with the Aussie CAD. We go here. So what I'm looking for is I'm looking for a very clear pattern like we've seen in the examples. And if you if you want an archive or a database of beautiful trades, simply go back to the Pipnotic Instagram and go through. And there are hundreds of these, and you can go through and you can learn to see what good setups look like. Okay, because there are absolutely mountains of them in this on this channel here, and they'll all look the same, and then most of them will share very, very similar traits. Okay, and so one of the traits is, let's see if we can find a trade, is that we want price to come back to these zones within 20 periods. I mean, maximum 20 periods. Okay, and this is because, assuming that this is a zone just here, price is left. Okay, at the time that price is left, we had an influx of buying. Okay, and because prices left so quickly and prices were unable to stay in that area for a very long period of time, the likelihood of that same or similar sentiment being intact the next time prices come back is very, very highly probable. Okay, Ranj is saying, which time frame is best to take supply and demand? I mean, you can do it pretty much in all of them. I use 1 hour, 4 hour, and daily, and I trade all of these time frames. I don't really use the half an hour or the 15-minute, although you could, but I'm just more comfortable slowing things down a little bit. And the good thing about using like a 3-chart configuration is that you see what's going on the major time frame, the daily. You know, you can see that we've just completed a bear cycle, and now we're beginning to move into a bull cycle. Okay, and you can see that very clearly here. You can expand it here. You can see that we're quite low, which means nothing, but we're just noticing that we're quite low. And then you want to see prices snap away from low prices, and this snapping away of low prices will tell us that this is a low price, because once prices were there, they could not stay there for long, and prices needed to leave. And so this would be that low area just here that we saw on the daily chart. Then prices started to do this. We started to form demand below price. Prices snap up. We start to break market structure. Prices come back, and we start to buy at these areas over and over again. We had this one here. This is at the base, at the bottom. Okay, prices got filled on this red candle. The trade was filled here. Prices left. We formed another one. Okay, prices got filled here when this blue candle poked into the zone. We sat on the zone for a little while, half a day or so, and then prices slowly started to move north. Then we had another inefficient run into that that nested demand there, and this is where we saw a continued interest in buying this currency pair. So we go on. So what I'm doing now is, and I have my supply and demand software running on all 3 charts. And then I have, just to speed things up a little bit, I have sync charts, which is just like a super simple tool that I have. You guys can get it if you like, that just synchronizes these 3 charts. So I don't have to move the symbol onto all 3 charts. I move it onto one, and then that little indicator does the rest for me. Okay, and so here you can see that this is what it's like on the daily chart. Here we have the 4-hour chart, we have the hourly chart. Okay, and so we can see super clearly that we have a signal to buy here. This area was formed, prices come back, and we start to snap up quite strongly, quite forcefully. These lines down here, this is just currency strength, so you don't have to pay too much attention to that. But then again, going back to this is the exact same stuff that we can see here on Instagram. Okay, we're looking for the exact same thing. And so what I'm doing is I'm really paying attention to the way price is behaving when it meets these areas of supply and demand. And so the whole process is just making sure that I'm ready to take the trade. So I do this simply by putting limit orders in, or the algo trader does it automatically when I find an area that I like. And we'll see if we can find an example of that that's setting up. It's quite late in the day, but we'll see if we can find something. This is what I'm doing, just going through one by one. Every morning when I get up, get to my computer, this is what I do. And I just simply move one by one. And when I see something I like, and I'm sure there'll be an example we can show you. Most of these have been filled already. Here we had a nice one from early today, late yesterday, little area of demand, prices popped up, we moved above this high. We had some nice reactions at this demand zone and prices continued to wriggle north. I was looking at this, but I was preferring to buy when prices came back down here, but it didn't, which is often the case. I actually miss a lot of trades because prices often keep going. It often chooses the zones that are the areas of demand that are higher until price starts to break down when price is strong. And if we look here, this is the pound yen, so the Canadian dollar yen. If we see an example here, here we have another one down here where prices formed this high, we rallied, we accumulated, and then we snapped up here. So what I'm doing here is I've got the algo running on there, and the algo says, well, I want to take a trade there. And if I like that, I'll say, all right, enable auto trading, and then it'll open. I'll let it do that quickly. And then when it's done, I simply switch it off. If I want to adjust it, I'll go like that, for example, and then I go to the next one like so. And again, I'm always paying attention to where we are relative to the big time frames. We've got the daily, the 4-hour, and the 1-hour. We're currently reacting on 4-hour supply. A bit of a messy supply. The price went quite deep into it, almost to the sell zones just here. And we go here. Look at the next one here, see if there's anything. Yeah, we had this 4-hour supply as well. And we had this 1-hour demand. We had this little 1-hour demand here. And this one was tested just here. So we had a tiny reaction. We probably would have got stopped out or break even here. And then this area of demand is responsible for removing this supply. You can see that it's pointing to that. And this is where price came back to. I had an order, and you can see the pending order I had in there. I think the order expired. I think it was from yesterday. No, from earlier today. Yes, and so we actually got filled here, and prices went higher. Okay, so it becomes quite quick and quite easy to do it when you focus on bleeding edge price. And this is, I think, quite key, is we need to focus on what's happening here and now. You don't want to focus on what happened 3 weeks ago. You want to focus on what's happening here and now, because if there are economic data releases, if there are central bank discussions and press releases, the stuff that price will often do the same thing or behave in the same way as we can expect it to do. So if you have positive sentiment coming out of a central bank, then this will be beneficial for the currency. Okay, so doing it again, moving to the next one here. I want to find, yeah, see, we have this one here, but looking at this, we're really low. Does that mean we're not going to continue to move lower? It doesn't. It just means that we're quite low. And typically when this histogram down here is so low, this is normally when we start to wriggle and move higher here. So I'm thinking we'll probably come to the lows here. We'll have a small reaction, and then we'll continue moving higher based on what we can see here. We're also at the buy zone here. So we have demand just here, the buy zone's established, and we're revisiting that area there. So that would be a slightly riskier trade just here, because we'd be selling at a relatively low price relative to the curve of this macro pattern that we can see just here. Okay, so going to the next one. Okay, before I do that, I just want to show you what we can do. For example, I mean, this is the hourly chart, but if I like this one here, then I'd simply change the time frame on this chart where the algo is running, and I can say auto trading, and it'll put an order in there. After a couple of seconds, there we are, then it's done. And I unmark it, go to the next one, and then I go back here. I keep moving through one at a time. It goes super, super quick. But the most important thing here that I want to bring to everyone's attention is that we're focusing on things that have happened within the past 20 periods.
If it happens within the past 5 periods, that's really good. More than 20 periods, 25 periods, and things start to break down. And again, if you look at the trades here on Instagram, I mean, most of these are happening very shortly after these zones are being formed. Okay, we have this one tested. Even this one here was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So this is 22 periods, the second test. Okay, so it's still pretty quick. These are all relatively shortly thereafter, immediately afterwards, very quickly thereafter. And so you can see a pattern beginning to emerge. Okay, when it happens very shortly after the zone is created, you get really good results. Okay, as you can see, I'm just going to go through a few of these so that you can see what I mean here. You see, this was a different one, but notice as well that yes, this zone held, but price came down and we moved through it. Okay, and so the trade would actually be to buy here because we tested it already. So the zone is technically speaking already gone, and this area of demand, we actually moved quite deeply into it. So this is telling us that we have a lot of demand at this area here. So from here to here, we managed to get 4/5 through 4/5 through the zone. And so maybe a second attempt, we could get the remaining portion of that area of supply. Another example here, another example here. And again, by showing you lots of these examples, I'm hoping that you'll see the patterns and similar behaviors that are beneficial. Look at this one here. One period, we snapped into it, boom, we moved really far away. This one here, 1, 2, 3, 4, 5, 6, 7 periods. Okay, we moved away very forcefully. Okay, so this is happening all the time on every possible time frame. As you can see here, we had this one here, we had a gap. Okay, the zone was qualified at the closure of the gap. Price went up to it, we almost gapped into it, then we started to break down. Okay, so super fascinating. At least I think so. If we have a look at, this is the S&P 500. So we had a zone here on this is the daily chart, which is qualified when this blue candle closed. 1, 2, 3, 4, 5, 6, 7 days later, a week later, we were filled. Price poked into that zone, and this is where prices started to move away from. Okay. Okay, so notice again, price visits the zone very shortly after it has been established. And so if price does not come back quickly, then it's often best just to pass on it. This is what I find myself doing at least quite often. We have this one here, 1, 2, 3, 4 periods later, we get filled. Even though we're quite high, we still get a manageable reaction in that zone just here. We have a look at the VIX. Not a lot. Here we had a little zone here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. On the 10th bar, we poked into it. We had a really nice manageable reaction, and then we broke through it. Okay, so these are not completely, these are not all going to be home runs, but you have to manage them accordingly. But if you do, you'll do super well. Look at Brent. See if there's any stuff. See this one here has been formed. 1, 2, 3, 4, 5, 6. The 6 periods. So we could say if we like that, you can just click that on. We'll do that as a matter of fact. Just click that on and allow it to do its thing. Because we had a lot of resistance here, and finally prices broke away from this area here. So we'll allow it to trade that. Now, okay, it's looking for a deeper retracement. It's a new configuration. So if we go like that, we'll see what happens there. Because this is like you can see there's a tough time moving through beyond that area. We finally managed, the origin of that is this kind of little price module here. So on the hourly chart, it looks a little bit like this. We've had some zones on the way up there. Looks a little bit like this. There's something in here. But testing, accumulation, snap. Very beautiful, very clear. Okay, so what's going on here? Renjani, please analyze gold. All right, let me have a look at gold. Don't have my glasses. Maybe they're upstairs. Here. So let's see what we've got here. Yeah, so it's saying that we have a really nice area to sell gold just here. I like that, so I'm just going to click it on. Again, testing failure. See, support compromised by this area of supply. Click that on and allow it to short. Put a pending sell just here. Just because I've got a configuration here that's a little bit without me glasses. Yeah, but that's what it's saying. It's saying to sell here. That's a nice departure there. So if we come back 1, 2, 3, 4, 5, 6 within another 10 or so periods, that might be an interesting place to sell. But for the sake of example, we'll put that in there so you can see. What else? Is there anything else you want me to take a look at? There was actually we had some nice crypto trades. We had Bitcoin and Bitcoin Cash. These are daily trades. Super nice. Where is it? Here. So this is the zone just here. So we had an area of child demand. Okay, this is the parent demand. Price came down. We tested. We accumulated. We went through. We don't often trade child zones because child zones are often established as a result of the presence of a parent zone. Price will often come through these children zones and move directly into the parent zone. And they're interesting. It's important to see these on the chart and to see where they have been removed, because this is often where you see prices move into again at a later stage. So we had a zone here. Price went through it, and then we came back to it. So if you extended this zone forward, it would be roughly where this box is just here. We had a really nice short on Bitcoin Cash. If I can find that here. This is a daily trade. Just here. This was a few days ago. And this was announced when this red candle closed. So this one, when this red candle closed, it said to sell here. 1, 2, 3, 4, 5, 6, 7, 8. So we had over 8 days to plan this trade. Prices came to it. We had a beautiful, beautiful reaction to it. So what are we doing there? Yeah, a bit of a price inefficiency below, but it's saying that we have some interesting areas here. We've had this zone here, which was tested more or less 2 times, once, twice. Now it's been removed. The origin that did it is this one here. This one's already been tested. Okay, so we can flick that one on. And not a good idea. It's getting late. It's evening here in Asia, so not a good idea. I'm also setting a lot of these to expire late afternoon Europe. So when the US session is beginning to wind down, because I find that when these trades are open, we have nice liquid market conditions, but when they get filled or almost get filled, we have slightly thin liquidity resulting in spreads, and so a lot of these trades aren't filling. But because they're not filling, they're still there pending, and I don't want price to come to it and not get filled because of a bad spread, and then price to come back to it at a later time, because if price comes to it and we don't get filled because of a bad spread, price has been to it. Okay, so the zone has been tested. And so I've just gotten into the habit of removing these or setting an expiration time on these. And you can see here, it's set to, I think it's 1600 hours, my broker time. That's set to true. So now I make sure that all of these trades expire by the time I go to bed here in Indonesia.
Good. Do you guys have any questions about any of this? Trevor, thank you for joining us. You can just keep going for a little while longer. So let's have a look at, you can use this also on stocks as well, the same methodology. Again, we're looking at bleeding edge price. I mean, how many bars do we have here? We're looking at about just over 30 bars, okay? Just over 30 bars. I mean, this is interesting down here. Oh, this is a crypto. We shan't touch that. Let's have a look at Volkswagen, just for fun. Yeah, so Volkswagen is quite low, which is good. It means that maybe it's time for a small retracement, but we don't want to assume that there's going to be one. We want to wait for prices to show us that there is one. You can see that we do see that because we are in the buy zone and we are starting to form demand. And so we could say, you know what, I like this a lot. I am going to allow it to take that trade. So I'll just click it on. Pretty wide spreads on this instrument. And we'll see if we get filled. So let's let it take that. No, it didn't want to take that. Must be invalid volume or something. My account's not big enough to trade this particular equity. We have a look at Shell. Oh, it's because the spreads are so wide. That's why it won't trade if the spreads are wide. And here we had Shell. We had one a couple of hours ago. This area here was filled about 3 hours ago. And then before that, we had earlier today, we had this one here, which filled already. That was beautiful. We had this one here. This was against the trend. This is against the trend on the hourly chart price, but we did have a reaction nonetheless, but now it's gone. The area that removed it was this one here. You can see this line's pointing to the one that did that. Demand, test, departure. Okay, then we have some zones that are really far away, so they're not interesting to us just yet. We have a look at Facebook. Again, focusing on the most recent price information, nothing Google. Yeah, so we're pretty high, so we're probably going to start to break down. So we want prices to show us that, and we are not yet seeing that. We still have 1 hour demand that's supporting price, so we need prices to move below that. Okay, but we do have this down here, which could be an interesting place to buy a little bit, providing that the spreads stay small. Okay, just here, we'd close that gap as well. So price would come back and close the gap that we formed here. I like that. But I think I have half a pip for my spread limit. Let me see. Conditions. 20, so 2 pips. So that should, no, it's just shy. So it wouldn't take that because it's about half a pip wider. We have Apple here. Let's take a look. The last one. Oh, it looks pretty ugly, doesn't it? That was an ugly one. But even though it's ugly, you know, you still get these nice reactions. Not all of them. This morning, earlier today, price just gapped down into the open today. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so the open today, prices just gap down through these zones here. That happens as well when you have illiquid instruments like this one here. But if you stay with the nice, like the DAX equities index and whatnot, then you'll find that these zones work very, very well. Good. Well, I'm gonna see if anyone has any questions. Any questions, anyone, before we wrap up? We've been going for 35 minutes or so. I don't want it to be too long. What do you reckon, Adinda? Are we good for a wrap? Yeah, sure. Perfect. Okay, good. Let's have a look at the US 100, the last one. Yeah, so we had this one. This is already done. It's already done. It's the 4-hour zone tested here, and prices are moving away. And so, I mean, that's already done. There's nothing to do. We do have this daily zone down here. It's a child. The parent is below. So prices might come through and poke into this dotted line just here, which is normally what happens. Good. Well, if you guys have any questions about any of the stuff you've seen today, feel free to shoot me an email. I just put it in the chat. And here's the website. If you want to come and say hello, that's where we operate. And if you have any questions at all, please feel free to let me know. Adinda FX Street, thank you so much for hosting this. And I'm gonna call it a wrap for the day. But thank you everyone for being here. Thank you so much, Adinda. See you next month. Thanks everybody.